Welcome to Morningstar. I'm Holly Black. With me is Rajesh Yadav. He's on the manager research team at Morningstar. Hello.
Hi, Holly.
So you have recently started considering ESG factors when you're applying your fund ratings, and you've been looking at multi-asset funds in particular. So what have you been finding?
Yes, Holly, you're right. We have recently expanded our coverage in the ESG space. And very recently, last month, we also formally announced, Morningstar announced that we will be taking a deeper look into funds and asset managers, how they incorporate the various ESG factors into their overall investment framework. And then multi-asset is an interesting piece because that has been one of the laggard or more questionable aspects of integration when it comes to ESG. And in that spirit, we have looked into various options available in the market for investors. And we narrowed down to a few options we have already covered in under coverage, but we expanded and chosen the Liontrust Sustainable Futures strategies, which are multi-asset strategies, which we have initiated coverage. We initiate 4 funds, 4 strategies in that coverage, and all of them are mixed asset or multi-asset remit. That meaning that they'll invest in equities and bonds and can hold cash for investment purposes.
So you've been looking at 4 funds within that sustainable range. They've all achieved a bronze Morningstar analyst rating. Let's look at a couple of them in detail. Where would you like to start?
I think probably take 2 ranges. The one is more in a defensive range, which is a sustainable defensive managed product, which falls under IEA mixed asset 20 to 60% share category, meaning that it will invest somewhere between 20 to 50% of its assets within equities, but can also hold up to 20% of its assets in cash. And I think this is a proposition which we think is for conservative investors. It's a good proposition to have in the ESG space, which is very rare to find.
Okay, so that's a cautious option. Let's move up the risk scale and look at something else in the range.
So the second option, which is higher risk orientation, is a sustainable managed strategy, which falls under IEA mixed asset category of 40 to 85% share category, which can hold up to 75% of its assets in equities.
Okay, so obviously you've bronze rating to all 4 of those funds, even though they've got different risk profiles. So how is ESG kind of affecting how you're looking at these funds?
I think for these particular fund and these particular range, I think the one thing is important to say that these are all fund managed by one experienced and long tenured team that is headed by a very seasoned investor, Peter Michaelis, who has been involved in investing in the ESG space since 2001. And I think one important factor which I want to highlight here is that this team, the core of the team, has been working together for over a decade, which is very refreshing to see. Where you see in the marketplace today is that every big house is coming up with their new ESG strategies. We feel there is a rush to the space of big managers coming up with their strategies, and quite often we find them either they are rushed, as I said, and half baked, and then doesn't have depth and long pedigree as this team has. So that is one thing we really like about these strategies.
Raj, thank you so much for your time. For Morningstar, I'm Holly Black.